Since 2020, only one other stock has performed like Supermicro is right now. What was it and how did it end? Today we'll discuss that, along with the UK falling into recession as higher for longer interest rates start to bite back. The 20-year moving average is holding for the US markets, but could signs of cracks just be appearing? What's for sure is we're starting to see strong rotation, which we've been reporting on over the last week. More importantly, though, we have nosebleed stakes now activated in what has become the biggest short squeeze in quite some time, with SMCI trading at over 1,030 in after hours as it cracks the big milestone. So, well, will this end? Will it get nasty? And why is the skew showing us something that's very worrying? A massive crush coming through over the last 24 hours. That and more coming up to today's show as we discuss stocks, commodities, and cryptos together. Well, welcome back everyone to The Daily Show, where we talk about markets around the world. My name's Tom. We've been running this show for over 3+ years together, and today we'll be covering macro data and the key technical analysis levels you need to be watching. As we've been discussing over the last couple of days, a rotation from big stocks into smaller stocks seems to be what's happening in markets as breadth improves across the board. But also breakouts in Tesla have us all wondering what's next for that stock, and we'll look at the big TA levels a little bit later on. But I thought we'd start here with something that's almost historic. The Russell 2000 is up only 34 points on the year, yet SMCI accounts for 26 of those points. There has only been one stock before that has had a run like this with a 98 plus RSI. Can you guess which one it is? And pause the video right now and put it in the comments down below. If you did guess GameStop, then you would be absolutely correct. And there are some similarities with GameStop that cannot be understated. A euphoric run, a short squeeze. The only difference is probably quality of the company. GameStop, obviously a bit ridiculous, and Supermicro Computer getting upgrades across the board. But what's clear is it's euphoric, it's way too many standard deviations away, and it's going to end in fireworks. At what price? We'll talk about it later on. Let's now mention off on what's going on with S&P 500 though, because vol skew spiked to a 2-year high over the last 24 hours. And this has people starting to look at everything in the market. Something that often does happen near the end of euphoria is a vol skew like this. And of course, we'll be watching it. We've got some indicators coming up later on. Another one that's entered here, which I think is interesting, from Mark over on X, if you want to follow him, and of course follow us as well while you're at it, links in the description down below, is that we had a New York Stock Exchange 90% downside volume occurring this Tuesday. Now, what was that caused by? Of course, it was inflation. And what tends to happen when it's around record highs is we tend to see a flattening or even a downward movement over the next sessions ahead. So you can see here the time where it kind of went sideways for a while, what we call a pullback in time. Then we had a pullback that was much more severe back in the GFC. And of course, we also had one back in 15 where we saw a sideways market movement for almost over a year and a bit. Then, of course, 2020 and right now. So although we don't have too many stats going with this, we do know that it is a warning sign sometimes when you have so many stocks that are selling off. Yet we've got this mass euphoria and, of course, what we call elastic demand that continues to get this market buying off every single dip, and it's doing it again. So you'll hear a lot of people talking about insider traders selling their positions. And here's another one, Jeff Bezos selling Amazon stake only in the last couple of sessions. Now, this is pretty big news, of course, but as we talked about, Stanley Druckenmiller has also been selling off his particular positions, only holding on to really Nvidia and selling AVGO, Broadcom, and of course Alphabet and Amazon himself. Is there any similarity with their sales and market action? Well, I would argue that Stanley Druckenmiller, being one of my favorite traders and investors of all time, has sometimes got a lot of edge on markets. I mean, he's made over 30% on average for the longest streak, and he did it with billions of dollars. So, of course, it's time for us to pay attention. But if we don't see price action reasonings, which we'll talk about later on, there's not much you can really do other than making a prediction, which really needs the right instrument of choice. What about the S&P 500 versus 1929? This is something that a lot of people talk about, and it has a correlation. Let's be real. 0.94 is a crazy correlation. And you can see where we're at right now, coming into a seasonal point of weakness. A lot of people are talking about this. Now, I don't personally want this type of sell-off because it's quite brutal and it hurts a lot of people out there. But I'm sure a few of you are like, wow, if this happened, it would be really exciting. And it would certainly bring that VIX well over 20. It'd probably be going to about 40 or 50 if we saw this type of sell. So 1929 versus S&P 500, of course, you cannot really compare them because they're different times, but there are some similarities, and there's no doubt the correlation, at least, is the most correlated to 24 so far. So where are we? We're in, of course, an election year. Sitting presidential running, if we have that, which in this case we do so far, then we usually see a pullback that tends to occur around this point in time, the OPEX, or the third week options expiration. This is a big deal because, of course, what happens here is statistically kind of like run out in terms of the data stats that we've been talking about. And we're on Friday, which has been historically for the Dow and S&P anyway, a negative session, only 40% of the time being bullish on the options expiration day itself. But it's the week after that really will dictate a lot. We have NVIDIA earnings coming up, which is going to be a blockbuster earnings. Is it a buy the rumor, sell the fact? Can we get through 750 call wall? All of these questions will be answered. Make sure to subscribe for that. But it's going to be that statistically weaker time. Now, if you know your stats on markets, about 57 to 62% of the time, you're usually pretty much bullish. So to be bearish is very difficult. And there are several reasons why, even the bears couldn't really look at this necessarily as negative. While we might see a pullback, are we going to get a buy that kind of pullback? Well, it looks like probably as we hit past 5,000, which is a big level. And when we tend to take a big 1,000 level, 6 months later in the previous times, we've always been higher. In fact, the stats are 100%. Maybe not enough, maybe data overall, but still a very important stat. Now, it's interesting to see that nobody's worried about recessions anymore. In February of 2024, no one's worried about global recessions. Yet we just saw the UK go into a recession, technically. So this is interesting, of course. Will the US end up having a harder landing than the soft landing that's currently predicted, with the perfect scenario being built in? We'll have to find out. But one thing is for sure, that nobody's really talking about recession anymore, and it's probably one of the most hated words in the markets. So that's when you want to start thinking about it. But we have a stat coming up later on that will be kind of like an early warning sign. So what about Wayne's data? He's gone and done a great study from March into May. And you can see here it's a 17-0 setup for the next quarter. So if we're going to see weakness, you'll notice he hasn't put in Feb and he's put in more the late end March. This is the time that we generally do see weakness. And that's a pretty interesting bull study in itself. Options markets, well, we all know that 50-50 and 5100 are the two next big levels. And if you're talking about positive gamma, which is usually a positive sign for markets, overall, we're still in it. Now, if we turn to a negative gamma situation, I've talked about it with a few people, and we all kind of agree that the negative gamma situation at the moment sits around 48.90 to 48.80. Now, are we close to that yet? No. But you'll notice it's just underneath the 20 daily moving average, which I think is going to be an incredibly important point for markets, as it's been what's historically showing this elastic demand. Another sign that we're going to be looking for, and we haven't seen it yet, is CTAs. Have we started to see them dump positions? We know that if they're dumping, we need to be paying attention, and we've got the latest update coming through, and it just basically shows that there's a small downtick. Not enough to report back on yet, but we will be updating you as it happens. Do remember, Fridays have historically been bullish since October, so having a big negative session, if we did, let's say negative 1% or something like that, would actually be weird since October, and that would kind of show that maybe we're starting to move into that seasonality. So it could be another early warning sign along with price action that we'll talk about. And for the bulls out there, do remember accelerating growth has been a big story, but really it's not just accelerating global growth, it's been the Mag 6. Those particular stocks have held up this market, and we've seen kind of a mixed result from the rest of the market. And we've basically got, I think, 494 stocks versus 6 right now in the top 500. And those 6 have now got lofty expectations on them. So it's something to be thinking about. Another good sign for the economies around the world is what we call the global wave, which comes from Bank of America here. And you can see it troughed last month with some interesting new reads coming in. If this continues to do well, obviously it will be decent for equities, meaning that pullbacks could be short-lived. Now, this is one I've been saying you might want to pause and maybe even snapshot it, because this is really interesting. The pace at which the Federal Reserve will eventually cut rates is going to be something you're going to have to watch. And it's because central bankers do not cut rates out of the goodness of their heart. We all know why they do it, because they broke the system. Now, if they cut 75 basis points or 50 straight away instead of going 25, 25, 25, 25, you know something's wrong. And of course, the market's going to be reacting very heavily to this. This is slow cycle cuts versus fast cycle cuts, and you can see a huge divergence between overall performance of the stock markets moving forward. Another kind of worrying sign that we're getting close to potentially too high markets is, of course, the dominance of Microsoft, Apple, Amazon, Nvidia, and Alphabet. These stocks making up almost 25% of the market now, even higher. It's pretty wild, and it does kind of show us that we don't have much breadth in the markets yet. We've already been talking about the Russell 2K finding strength from here, and the reason is going to be that we are so disconnected between the both of them. 50% discount to the SPY in terms of valuations, 20%, well, probably about 17% now from the all-time high. So the Russell's been suffering hard. And if we do end up getting yields to go down, that is, we end up getting yields moving downward side, and we'll talk about that later, then that will usually be positive for the Russell, with some nice breaks and nice movements on the Russell at this stage. Divergence in breadth, we've talked about it. It's not great for the markets theoretically, but at the moment, the Mag 6 have been holding it up. And we mentioned before there could be a recession indicator. Now, one of those has been when we see vol ratio hit lows, and we obviously saw similar reads to this in 2006. We're not quite there yet, but if we are, we'll update you. And that usually marks about a 1 year round. Now, we also have talked about US 2-year versus 10-year breaking back down in terms of actually going from inversion to non-inversion. That being an indicator. And then, of course, usually around 6 months out from a recession getting called, you're seeing unemployment spike, which we really haven't seen yet in the US economy anyway. What about VIX call walls? Well, we know that there's a gamma switch that's going to happen around 15.5 to 16. So that's going to be an alert you may want to set in the future. Again, we'll update if this changes. But at this stage, until the VIX is above kind of 16 with the daily close, we can't really be sure there's any type of swing going on in the market that's significant. Another one we've brought up many times is the idea of 1,000 level, the idea of a 6-month run on markets, and then either a pullback in time or a pullback in itself. Now, it says here that S&P 500 launched at 4,000, but do remember it technically sold off first. We've seen a very minimal sell-off. So there still could be more to come in terms of a pullback or a slowdown as the Mag 6 kind of slow while the other stocks start to pick up steam. And if they slow and we see sideways on them, remember the other stocks are so small in comparison that they're not going to necessarily pull the index up as much as you might think. But it will be still good and healthy for the markets. Let's talk about healthy markets and unhealthy markets. Of course, China's bounced the other day, a 3% thrust, showing that maybe one of the worst market performers is starting to turn. We've already talked about demographics. Watch one of our other videos if you're interested. There's no doubt that China's facing one of the biggest crisis periods over the next couple of decades. But we're talking now, not then. So obviously markets can perform okay in what we call the Lunar New Year cycle, which we're in right now. And it tends to perform better just after the Lunar New Year cycle. So an interesting stat there. We've also got some interesting other things. Defined outcome ETFs coming into the markets near their lows, usually historically a bullish sign. And of course, Chinese stocks changing the regulator, which has actually been positive almost every single time. And I think the average was 10% gain over these particular periods over a 2-month period. Now let's talk about earnings. We've already seen some big moves. Of course, next week is Nvidia, so you're going to have to be on top of that one. It's going to be fireworks for sure. Is it a buy the rumor, sell the fact? What type of condition will we end up seeing with one of the biggest stocks in the world, the biggest runner really of the last kind of year and a half? That's going to be a big one, and we will update you as well on the implied movement switches. So there's going to be a big deal because as we saw this week, some of these stocks, specifically things like Hood and stuff, were moving heavily. And it's what we focused on the channel because you need to be aware that there are huge moves that could be coming. Let's now talk options. It was another monster day of calls. 60% calls, 29% retail, but let's be real, it was all about a couple of stocks. in particular super microcomputer, which had a 14% upward move, another +3 after hours, and a very even amount when you think about it of calls and puts, 6.25 times the average. Tesla also coming out with a 1.44 times. And even though the markets have been pretty wild recently, we didn't really see a massive move on the S&P. It was individual stocks getting a lot of interest as we go through earnings times. Retail traders pushing a lot of those 21 names again as well. Things like Mara getting some big trades on it, going down 8%. Then we also got some big trades on things like Coin and stuff like that. So some stuff going on underneath the hood that kind of reminds us of a euphoric run. And where that happens, you need to be ultra cautious. But there are still opportunities out there. And what we saw over the last 24 hours was big tech and semis went kind of poorly. And all the most hated sections, energy doing quite well. We'll look at oil later on. Regional banks, gold making up some of its horror losses. And some of the others like we've been talking about, solar, etc., having standout days in comparison to the big tech stocks. Let's now move into the charts. We've got to talk about this central bank liquidity. Kind of upticked, actually, weirdly enough. However, still pretty flat line since we've been moving up, which means that the central bankers aren't really supporting this move. US 2-year, pretty strong little bullish kind of hammer here in terms of movements. We are still expecting yields to possibly push 4.7, which will affect the US 2K. Remember, it's very susceptible to yield moves if that does occur, so we've got to remember that. US 10 is also slightly moving up, which again is showing that maybe we've got some interesting stuff going on here. And it's all leading into also a copper move. Now, we mentioned copper for the first time in a little while in the last video, and I really like this setup, and it was really nice. I talked about it in the Market Masters Club. Links in the description down below if you want to check that out. And of course, this was a pretty big deal because we saw a switch towards the upside. We've kind of breached a bit of a downward trend. Copper's been pretty bad for about a month or two. It's not through that 4 level, that 3.944 level yet, but that's a nice daily close. And it's kind of signaling that maybe there's a bit more strength in copper moving in. And that might also be meaning that we've got oil possibly about to break out. Treasuries ended up doing an island reversal, but as I mentioned last video, it's in the middle of nowhere. Now, an island reversal should mean that yields are going down, but I really don't think, even though I'm bull on treasuries over the next 6 to 12 months, I don't think that it's at a very important level yet. So it's not at 89. It's kind of on the new low. Too early to tell what it's really doing. When we go over to transportations, home builders, they were all pretty strong and holding up. So that's obviously decent for the economy. And then when we move across to the US dollar, you can see here that it was still holding above that 104 level. And 104, 104.20 is where I'd expect a buyer to recommence if we are going to get that 105.80 that we've been talking about since the breach that happened on the inflation figures. And it's perfectly normal for the market to pull back after this because, of course, it was like a false break to the downside, rallied up, typical of a lot of these news events. We're coming into PPI. We've seen kind of core retail sales, which have been meh. So, it's a lot of confusion in the markets about which direction it needs to be going in. But this is one that we certainly are watching. Another one that we need to watch is the skew. Now, this was a big skew crush. Don't get me wrong. This is pretty wild. And it is one of the biggest skew crushes we've seen in a while. Now, tends to be when we get skew crushes that sometimes we either go to the negative side usually or we go sideways with a slow kind of grind sideways. So you'll notice here previous skew crushes that occurred very quickly, they end up leading into the top of the market. We get a skew crush here, which ended up being with a sell that happened initially, then a bit of a rally, then kind of a sell again, which gets you back to the same point. And other skew crushes as well kind of happened where we went sideways a little bit afterwards. So it's not the best indicator in the world, but it does show you that something a little unusual is happening, and that was a big skew crush. So I will be paying attention, and it's just another sign if we see price action go to the negative side, which we'll talk about, if it does happen, that we'll be looking at. US oil. Now, I think this one's worthwhile watching because, of course, 78 is a big strike. 78.50 day close will be a big deal. It's a pretty interesting base accumulation. If it does breach out, we're talking 82 to 84 a barrel, at least from the TA standpoint. And that's a fairly big deal because, of course, if we get the markets up into this point, it's probably signaling that we've got yields going up, dollar indexes going up, and maybe also the market is coming down. Because, of course, if oil is going up on the barrel, that's probably leading into a higher inflation read as well. So I think all of these things should be considered. Consumer discretionary versus staples, still holding strong. No real issues in that particular market at this stage. And if we have a look at IWM versus the SPY, you can see here that we have been seeing IWM perform quite well. And if we get through this ratio, which is kind of at a resistance right now, 0.41, then we should be looking at actually, generally speaking, continued strength of the Russell versus the SPY. And I would consider that to be another sign that we're probably going to see outperformance of the smaller stocks for the next maybe even couple of months if we do end up getting these types of breakouts. So a lot of stuff going on there. Another one that we've been talking about has been ARK, and we can see here it's been quite strong, showing you that a lot of these smaller, maybe not so profitable stocks that were so popular in 21 are starting to run again. Could be a sign of concern in general, though. You've got some pretty lengthy bases on a lot of these. We already talked about Hood and a few others earlier in the week. Now let's talk about the elephant in the room, because of course it's SMCI. Similar to GameStop, though probably a much better company overall, we've got a monster runner. Now, I think anyone can tell that's not normal. And eventually, these tend to blow up in a pretty big way. Now, it doesn't mean the stock's not worth anything. It's probably not going to go to zero or down that heavily, but it does represent a squeeze. And we're seeing it after hours again with another $30 up in after hours trade. Now, where could it go? Well, it can just keep running and running and running until eventually it explodes. But obviously, we've seen a lot of memes coming out about a bubble in AI stocks. This is usually not the time it sells off. It tends to sell after the bubble speech becomes, now we've got new targets. So what I'd like to see, and we're already seeing it with NVIDIA, is targeting people that say, wow, we're going to new levels. 1,000 is the obvious target that everyone's got for NVIDIA. SMCI, I'm sure people are already looking at 1,500 and 2K out there. And there's no doubt that this is going to end for some people in tears. But if you're in this, congratulations. It's a massive move. It's gapping up each day. It's squeezing out. And generally what's going to happen is you're going to get a huge dump that's then bought up because everyone's going to get so excited. We're going to follow this stock every single day now moving forward. So make sure to stay tuned, because this is going to be one of those ones that you want to remember. It's definitely a great lesson in the markets, and it is nosebleed right now. Let's move over to Tesla. Nice breakout for it. I've already done the inverse head and shoulders kind of TP zone, if that's what you believe is happening right now. I think 210 is going to be an interesting level for it, and it just broke 200 and the daily 20 moving average for the first time. If you've been bullish in this and you've kind of believed in that most traded zone, or you've been selling credit here, this is a smiley face for you. And we've already talked about the stats with Tesla, and so far so good in terms of it holding some of the stats that were all around that gap down. So nice breakout there for it. I'm probably expecting there to be a little bit follow through in the next session. Let's talk TAN. Nice market, looking okay. It's obviously holding up at this point. Like to see it breach 48.30, 48.50 zone, and it ended up closing as a doji with a gap, but it does have some good signs moving through. So does clean energy, etc. Now, NVIDIA is doing a pullback in time potentially at this stage. Is the trend still up? Yes. What are we all waiting for? Earnings. And it has certainly bought the rumor. Now, the question is, can it put up the numbers? You can see here that huge move. And do remember, let's just quickly take it from last earnings. So last earnings was here. Let's have a look at last earnings to now. We are talking about a 52% move. Woo! That's big, guys. I'm interested and excited to see how this goes. Now, I love NVIDIA. I think it's a great stock. And don't get me wrong, if I'm a long-term investor, I don't really care. But yeah, certainly it's going to be one for traders to be looking at, in particular, but possibly reaction after the market result comes out, which we'll be covering next week. Let's talk about Hang Seng Index in China now, because of course it's been improving recently. We can see some nice base formation, 16.5, still a level where I think momentum will start to kick in for this market, and it's pretty much hated across the board. We're seeing the same type of thing in KWeb, CQQQ, and others, where they're starting to put pressure on those 20 moving averages, which have been keeping them down. So some signs of potential life in those markets. Over to the US 2K now. Now, this is a pretty good weekly close, especially if it closes above the previous closure highs. That's a good deal. So far, it's looking nice in terms of price action. We talked about 2090 being a bit of a zone. This green box, I feel like I've had it there for ages. and it hasn't found it yet. But things are starting to improve. And if you really zoom out, you can see what I mean here. A lot of people probably drawing cups and handles and all sorts of things in terms of patterns. In general, it's a big breakout level. And if it manages to get above our green box, I think that could be a really good sign of things to come. That's going to mean IWM SPY is going to move as a ratio as well. And yeah, I think this is an interesting market. Let's talk about now Magnificent 7, or should be 6 really, because of course they're starting to stagnate with sideways action over the last couple of sessions, and something to look at. Semiconductors, you can see here, have weakened a little bit, so something to note. And when it comes to things like the Qs as well, when we take a look at the Qs, you can see that they've actually just filled the gap. So again, it's actually behind or right on the gap. So it's actually behind the S&P in terms of overall. And that's because the NASDAQ's been outperforming everything else for quite some time now. So 20 moving average still holding up here, and an important level for sure. Let's look at US 500. So this is where we talked about potentially the bears sitting between 5,000 and 5020 was the zone we talked about yesterday. And in our live session that we ran before the show, I was talking about the 49.95 being the breach down that I think was going to bring sellers in. Now, of course, core retail sales came out, or retail sales, and it just kind of went up, down, and all around, then pushed higher. There's been just a series of higher highs and higher lows for now, so no switches of trend. Not much going on up here. If you are going to go short in these markets for whatever reason, you've got to be very careful. Risk is really high there. And obviously, you need to probably be thinking about options and protecting yourself, because, of course, you are making a prediction, and we often don't like doing that. I like to see the market actually show me in price action something's occurred. For now, bulls in control, and this level, nothing much going on. That's just how it is. We could be looking at new highs. 50-50 obviously is where that big zone is. For NVIDIA, it's 750 on the call wall. And if we talk about OPEX, obviously, it's generally speaking a negative session, but it's only 60-40 as a split. So that's something to keep in the back of your mind. Over to the crypto markets now. Bitcoin is boring coin again. Now, why I say that is it's been amazing, but it's hit my target. I don't know exactly where it's going from here. This was a target I had set, which was just under 51K, 50,900. I think around here, I would expect structure to be formed. It's possible to go to 55 first, which is, of course, a lot of people's target zone, but I kind of expect it to slow here a little bit, and we'll have to see what ends up happening. Very good win, though, for Bitcoin traders. If it does start to go sideways, generally Ethereum and the other coins start to run afterwards. And we'll do a special on the combo of Ethereum BTC, so you can see how the ratios are looking so far and why, if Bitcoin can hold, Ethereum might actually end up performing better. When it comes to news moving forward, do remember options expiration is on Friday. That's going to be a fairly volatile day, you would think. And we also have PPI and core PPI coming out, as well as prelim UOM consumer sentiment. So a lot going on in the markets right now, everybody. Make sure to stay tuned for our show coming out next week as well. And of course, the weekend, where we'll talk about everything to do with the big news. NVIDIA is a massive catalyst. OPEX is a catalyst. It's all happening. And we're just looking for those signs.